Can the U.S. effectively manage economic assaults, particularly those originating from China? China's dumping of the largest volume of U.S. Treasuries in history prompts questions. What's behind this move? China dumped U.S. Treasuries substantially in the first quarter of 2024, signaling potential future actions. The U.S. desires an end to this trend. Could China seek to bolster the yuan by destabilizing the U.S. economic system and its reliance on the dollar? Let's find out. In the first quarter of 2024, China executed an unprecedented sell-off of U.S. Treasuries and agency debt bonds, totaling a staggering $53.3 billion. This action marks the largest single sell-off by China ever recorded, drawing significant attention from global financial markets and geopolitical analysts. The timing of this sell-off is particularly notable as it occurred while the U.S. dollar was experiencing a decline, reaching a one-month low of 104.20. China's $53.3 billion divestiture of U.S. Treasuries in Q1 2024 stands out due to its sheer magnitude. To put this into perspective, this amount exceeds previous quarterly sell-offs and represents a significant portion of China's total holdings of U.S. government debt. Historically, China has been one of the largest foreign holders of U.S. Treasuries, using these assets to manage its foreign exchange reserves and stabilize its currency, the yuan. However, this drastic reduction suggests a strategic revaluation of its financial and geopolitical positioning. But what's the context? Why would China do it? The sell-off took place against a backdrop of a weakening U.S. dollar, which fell to a one-month low of 104.20. This decline in the dollar's value is partly attributed to various economic factors, including concerns about the U.S. economy's long-term debt sustainability and fluctuations in interest rates. China's decision to sell such a large volume of treasuries at this time suggests a calculated move to minimize potential losses from a depreciating dollar and to reallocate its reserves into more stable or advantageous assets. Financial markets reacted swiftly to the news of China's sell-off. Bond yields, which move inversely to prices, experienced volatility as investors grappled with the implications of a major player like China offloading such a significant amount of U.S. debt. This action raised concerns about potential increases in borrowing costs for the U.S. government and the broader impact on global financial stability. Here's a reminder to please like and share the video and subscribe to our channel to watch more videos on Africa's geopolitics, economy, and changing landscape. Let's continue now. China's recent actions are part of a broader trend among BRICS countries and even some U.S. allies to reduce their holdings of U.S. Treasuries. For instance, Belgium, a long-standing ally of the United States, sold $22 billion worth of treasuries during the same period. This simultaneous divestiture by Belgium highlighted a growing unease about the stability of the U.S. economy and a desire to diversify away from U.S. dollar-denominated assets. Since 2022, BRICS nations have been steadily offloading U.S. Treasuries, reflecting a strategic shift in their reserve management. The cumulative effect of these actions signals a significant move away from reliance on U.S. assets. This trend is driven by several factors, including concerns about the U.S. rising debt levels, geopolitical tensions, and a desire to build more resilient and diversified portfolios that are less susceptible to U.S. economic policies. The United States national debt has ballooned to $34.4 trillion, raising alarms among investors and foreign holders of U.S. debt about the sustainability of U.S. fiscal policies. The uncontrolled debt levels pose risks of inflation, higher interest rates, and potential downgrades of the U.S. credit rating. These concerns have prompted countries like China and other BRICS members to reconsider the safety and returns of their investments in U.S. Treasuries. Geopolitically, China's sell-off can also be seen as a strategic action in response to ongoing tensions with the United States. The trade war initiated during the Trump administration, coupled with ongoing disputes over technology, human rights, and military presence in the Asia-Pacific region, has strained China-USA relations. By reducing its holdings of U.S. Treasuries, China signals its intent to lessen economic interdependencies and mitigate potential financial leverage the U.S. might hold. While reducing its US Treasury holdings, China has simultaneously been amassing significant quantities of gold. In 2023 alone, China purchased gold worth $550 billion for its reserves, making it one of the largest buyers globally. This trend of accumulating gold, observed among other BRICS nations, highlights a strategic pivot towards tangible assets perceived as safe havens amid economic uncertainties. We will also talk about why China is moving toward gold in the end of the video, so stick around. So, what's the immediate market reaction of this action? The immediate reaction to China's sell-off was marked by increased volatility in the bond markets. Bond yields rose as prices fell, reflecting concerns about the implications of such a large-scale divestiture. Investors worried about the potential for further sell-offs and the impact on the U.S. government's borrowing costs. Higher yields could translate into more expensive debt servicing for the U.S., complicating its fiscal management. Global investor sentiment has also been affected, with markets displaying caution amid fears of a ripple effect. If other major holders of U.S. debt follow China's lead, the resulting sell-off could create significant turbulence in global financial markets. This scenario highlights the interconnectedness of global economies and the potential for one country's financial decisions to have widespread ramifications. Now, an important question is, what was the motivation behind this action? China's record $53.3 billion sell-off of U.S. Treasuries in the first quarter of 2024 is a move rich with strategic significance, reflecting a complex web of economic, geopolitical, and strategic motivations. At the core of China's decision to offload such a substantial amount of U.S. debt are its domestic economic considerations. The Chinese economy, while large and influential, faces several internal challenges, including managing liquidity, stabilizing its currency, and addressing the impacts of a slowing growth rate. By selling off U.S. Treasuries, China can generate the necessary liquidity to support its domestic financial system, particularly during periods of economic uncertainty. China's yuan, which Beijing closely manages, also plays a critical role in this strategy. By reducing its holdings of U.S. dollars and U.S. assets, China can better control the yuan's value against other currencies. This move can help buffer the yuan from external economic pressures, including those stemming from U.S. economic policies or global market fluctuations. Stabilizing the yuan is crucial for maintaining economic stability within China, especially given the interconnectedness of its economy with global trade and investment flows. The sell-off also reflects a strategic action in the context of increasing geopolitical tensions between China and the United States. The relationship between these two economic powerhouses has been fraught with conflict, ranging from trade disputes to technological competition and military posturing in the Asia-Pacific region. By reducing its holdings of U.S. Treasuries, China signals its intention to lessen its economic interdependencies with the U.S., thereby diminishing potential leverage the U.S. might hold over China in financial terms. This move can be seen as a form of financial decoupling, where China seeks to insulate itself from potential economic coercion by the U.S. Given the strategic rivalry and periodic escalations in trade and diplomatic conflicts, holding significant amounts of U.S. debt could be perceived as a vulnerability. By diversifying its reserve assets, China is better positioned to navigate and mitigate the impacts of these geopolitical tensions. The strategic motivations behind China's sell-off are not solely based on its bilateral relationship with the U.S., but are also influenced by the dynamics within the BRICS alliance. As we have already discussed, the BRICS countries, comprising Brazil, Russia, India, China, and South Africa, have been increasingly collaborating to reduce their dependence on Western-dominated financial systems and the U.S. dollar. This collective strategy aims to enhance their economic sovereignty and resilience against external economic pressures. Since 2022, BRICS nations have collectively offloaded billions in U.S. Treasuries, reflecting a concerted effort to diversify their reserve holdings. This trend highlights a shared goal among these countries to build a more multipolar financial world, where their economic stability is not overly reliant on the U.S. dollar. China's recent sell-off is a significant step in this broader BRICS strategy, aligning with the group's long-term objectives. So, why is China moving toward holding gold? Firstly, gold is seen as a safe haven asset that provides stability during times of economic uncertainty and volatility. By increasing its gold reserves, China can better hedge against inflation, currency depreciation, and global financial instability. Secondly, gold accumulation reduces reliance on the US dollar, aligning with China's and BRICS's broader goals of financial diversification. The move towards tangible assets like gold reflects a strategic effort to enhance financial security and independence from US economic policies. Do you support China in this decision? As it's a part of BRICS Plan 2, will African nations also step in? Let us know in the comments section, should Africa step in? Do you want to watch more videos like this one? If yes, subscribe to our channel and press the bell icon next to it. We have decided to bring videos on something nobody talks about: African politics, economy, and increasing power. Thanks for watching, and until the next video, stay tuned.
Tell us what you think in the comment section. Like and share the video, and subscribe so that you don't miss any of our African videos. It's the best way to support us.